point can we safely stop worrying about the stock of Valeant Pharmaceuticals, the company specializing in dermatology, ophthalmology, and gastrointestinal drugs that's been in the news endlessly for the past couple of years, as the stock plummeted from $262 2 years ago down to $9 back in April, before bouncing up to 14 and change as of today. Valeant's had some legal and leadership troubles, as well as balance sheet worries, about $30 billion in debt put on to buy other drug companies, and a thorny shareholder, Pershing Square, the hedge fund led by outspoken Bill Ackman, which sold its enormous position in the company at a gigantic loss right near the bottom. Lately, though, Valeant's made some positive moves, and I have to wonder if new CEO Joe Papa, the man brought in to turn around the company, is really getting this situation under control. He sold off underperforming assets, focused on research and development, and consistently paid down the company's heavy debt load. To me, a critic of the company, I now feel that Mr. Papa has indeed started to turn things around. Although the company did lower its revenue outlook when it reported last week, which caused the stock to pull back from $15.64 to a little north of $14. So what are we supposed to make of Valeant here? Let's check in with Joe Papa. He's the chairman and CEO of Valeant Pharmaceuticals, get a better sense of what's happening in the situation. Mr. Papa, welcome back to Mad Money. Good to see you, Joe.
Good to see you,
How are you?
Good to be here.
All right, so, Joe, I was critical. When you were on last, I was concerned because of the big debt load.
Sure.
There were a lot of things that were wrong, and I wanted to know if you were up to the task. I've got to tell you, performance speaks louder than words. You've been doing exactly what you said when you came on the show. And congratulations.
Thank you, Jim. Thank you. It's been, I will say, first and foremost, it's been a challenging 15 months, to be clear, but we've made great progress as a team. We brought in a brand new team, new CFO, new general counsel, new head of my quality organization.
Good places.
Good places, yeah. We got them from people that I really felt that I had known in my past. They were going to be good people to join the team. We have some great people already with the company, so that helped as well. But we've been dealing with all the issues. You came last year when I was here, or you talked about our debt.
Right.
We've in the time period since last first quarter of 2016 to now, we will have reduced our debt. As of today, in fact, or yesterday, we paid back $500 million more. So we're at $4.8 billion of debt reduction in less than a year or so.
Ahead of what you said.
Ahead of what we said. We said we'd do it by February of 2018. We're well ahead of schedule, both in the actual quantity, but also the amount of time. So we're making good progress there. The other important question you raised is, where are you going to grow? What are the products? We've got a pipeline that we are really proud of. We launched a product called Relastore. That product this year is up 33% versus last year. Good news for us. Right. We launched a product, Silique. It's a product for psoriasis that we were talking about last year. We didn't know exactly the circumstances, but we're delighted now to have it in the marketplace. Right. And it has some of the best efficacy in terms of the treatment and the eradication of the plaques for psoriasis. So really good news for us.
And I think that one thing that I was questioning was short term. How are we going to be able to pay down that huge amount of debt that was coming due? Yeah. But I know from my friends at S&P, you've been able to do that handily. We
worked very hard at this. It was one of the key priorities for us. Reduce the debt, very much along the lines of what you said a year ago. We knew it, but we paid down by selling some assets. We've made now 12 different asset divestitures. Those asset divestitures, 10 of them are already closed. I've got 2 more that will close sometime in the second half of the year. That will generate another approximately $1.2 billion of proceeds that help us pay down more debt.
And that has not been dilutive. These are not things that have hurt the earnings profile in the out years that I can tell.
No, because what we've been able to do is, the first thing I had to do is, what's core to our future?
Right.
And I said, dermatology business, core. Bausch & Lomb, critical for us, core, big. That's now 56% of our business is in Bausch & Lomb. Okay. And then the GI business, our Salix business, another, that was in the last quarter, it was 17% of our business. So we focused around where's the core, we invested in that core, and now what we're doing is paying down the debt with some of these, what I called non-core assets.
Now, when you reported last week, the stock did get hit. The stock analysts, some cut numbers, but what I thought was interesting was, from my, again, point of view, the bonds actually went up. Your interest rate went down. So the equity guys, sometimes they know a lot, but it's the fixed income guys that you've been following that seem to have been making the right calls here.
Yeah, well, we think that they do a great job. They very much follow how our cash is, what's the cash generation of our business. They've been following that. And importantly, yes, we did reduce revenue slightly because we're selling some assets, but we also did not reduce our EBITDA. So the earnings before interest, tax, depreciation, amortization, we held constant.
And that's why the bond guys.
And that's why it's all about the cash, generating the cash.
We also talked about the idea that perhaps Valeant had been, previous to you, a leader in price increases. A lot of people felt that they were taking advantage of the system. You said you would look at the pricing and you would change that. Where are you there on that issue?
Yeah, within the first 2 weeks I joined the company, we started what I would refer to as a patient access and pricing committee. That patient access and pricing committee looked at making sure, as a primary objective, that patients have access to Valeant products. We've done that. That's well underway. We also said, though, that we would limit our pricing to a single-digit price increase on any of our products.
Right.
So that we felt
taking a pledge on that.
We did say that publicly, that is what we would look at relative to future pricing. So we've taken the steps we think that to address some of these issues. I mean, we had a few legacy issues. I said at the beginning, it was a challenging 15 months.
You had some legal issues.
We had some legal.
You also had Bill Ackman, who seemed to be, let's say, indecisive about his position, but he has since left the company. Do you have any interaction with him at all?
Well, I talked to Bill on occasion. Bill's been helpful to me as I thought through what we were doing with the company, certainly since I joined.
But in retrospect, you should have doubled down rather than sell.
Well, Bill had to make his own decision on that. But we've made great progress. And, one of the things that happened last week, we unfortunately got a complete response letter on one of our products that's awaiting FDA action. And candidly, it was because of one of our sites. That site, we've now been communicating with the FDA on a regular basis on that. In fact, we had a communication with FDA just this morning. And we believe now that the FDA is going to upgrade that manufacturing site to a voluntary action indicated, which is an important step for all of our future innovation and all the products that we make at that site. So
that could be near term. That could be some near-term good news.
Very, very near term.
I know the drug industry is a bit of a club when it comes to the CEOs, and one of the club was a fine man, Ken Frazier, Philadelphia, was attacked by President Trump, and it seemed to me unfair. I just wanted to know your view of the situation.
Yeah. Well, Ken Frazier is a phenomenal individual.
He's kind of like a role model for all of us.
I've had the chance to be in a couple different meetings with Ken. He's a great individual. Ken had a position on this. I think the most important comment I can say on this is that, at Valeant, racism and discrimination, there's no place for that in our company. And what we're trying to really do work, and our focus is to make sure that we have quality healthcare outcomes for patients all over the world, and that's really where we're focused on.
Last question. You have, as always, you are a very transparent person. You put out a fantastic deck, and you talked about 2018 and years for growth. You feeling as confident or more confident about the years for growth after all that you've been through since we saw each other?
Yeah, well, I believe that the new products we have are going to generate the returns for our shareholders that we need to generate. So I clearly believe that. We had some products that were losing exclusivity, and there's nothing that was going to happen. There was nothing we could do about that. It was one of those findings that we realized very early. We made it as transparent as possible in our package. But the important point is that if you think about what's growing in our business, the Bausch & Lomb business, the Salix business, and soon, hopefully, the dermatology business.
And you don't have to sell any of these, right? Because of 2020.
We feel really good about what we're doing. We have 0 debt maturities between now and 2020. So that gives you a real chance to invest in the business. And the latest results on the earnings side that we talked about was that Bausch & Lomb, and it was up 6% in the quarter. The Salix business was up 16%. Cumulatively, those, on an organic basis, those businesses were up 8% in the quarter. That, to me, is what's really important in terms of the revenue growth and where it will lead for us for earnings.
I could not agree with you more. You were a man of your word, and then some. I was tough on you. You exceeded everything that I thought was possible, Joe. Okay, that's Joe Papa, Chairman, CEO of Valeant Pharmaceuticals, VRX, who's done a remarkable job in turning this company around. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.